All right, welcome back to QuickBooks Chapter 10 here. We're going to be doing the payroll setup. So again, this little section here pretty much gives you an outline of what happens when you actually choose to have employees for your business, okay? If you remember, QuickBooks is a business is broken into three sections, right? Your vendors, your customers, and you need people to work for you, so your employees. So how do we go ahead and prepare to have some employees and have them work for us, okay? So this is what we're going to do. We got to do a payroll setup first. So if you are following along with me in the book, please be on Payroll Setup 21, okay? So here, I'm going to skip forward through this just because you definitely want to make sure that you read up upon these. Now, before even setting up your payroll, you first need to go through these 10 steps to set up your payroll, okay? Now, in these 10 steps, they yet again miss step number 0. Step number 0 is considering if you are going to be having employees, how are you going to pay them? Are you going to pay them every day? Are you going to pay them every week? Are you going to pay them bi-weekly? And how do you choose to pay them? Are you going to pay them by hour? Are you going to pay them as a salary? Are you going to offer things like overtime, right? Or are you going to offer things like vacation time, sick time? Are you going to pay for all of those? And then second of all, so once you get the compensations done, you also need to consider, are you going to provide benefits for them? Or deductions that take away from their paycheck? Like, are you going to have a 401k retirement plan for them? Are you going to provide medical insurance for them? Are you going to provide vision, health, and dental? Right? Are you going to provide them any fringe benefits? Pay for meals, pay for traveling. All of those are going to be considerations that you need to take before even considering setting up your payroll. Because if you don't even know what you want for your employees, then this process here to set up your payroll will take you the longest time to set up. Okay? Because if you're not quite sure what you want, then you want to map that out, because one of the key components is that when you do have your vendors and your customers, right? Your customers are paying you money, but at the end of the day, they're paying you money for you to pay your vendors, right? To buy the necessary things that you need to operate your business, right? However, a huge chunk of being in business is, can you afford to pay somebody to work for your company? And if so, what benefits can you offer them to keep them working at your company, okay? Because most cases, right, if you are have a job opening for anybody, right, but you don't provide any benefits, you can guarantee that that person is probably using you as well to either gain the work experience, or two, they just need a temporary job just to get by. All right, they aren't planning to stay long term. But if you offer these extra benefits and deductions to these employees, then they are more likely wanting and willing to stay. All right, so step 0, you need to establish those find those things like how are you going to pay them, when are you going to pay them, and exactly what do you offer them before you can even start these 10 steps, okay? So then step number 1 goes, okay? We're going to gather all the information about your employees. So that means collecting W2 forms, okay? I'm sorry, W4 forms, which is going to be the employees' means of withholding tax from you, okay? What other information do you need? So if you require that they are a U.S. citizen, They need to show proof of a birth certificate or a social security card, or some kind of documentation that proves that they are a U.S. citizen. If not, and you accept anybody that is non-citizen, then they have to provide you with a work social security number. Okay. They also have to provide a state license identification card, just so that they can prove that you are you. And pretty much that's collecting all the information that you are gathering about your employee. Okay, because you have to run through their background check by running their social security, okay, and so on and so forth. Okay, once you've done that, then you're going to set up the payrolls by going through the payroll setup interview. Now, once you've done that, right, what happens is as you go through that interview, you start setting up your payroll accounts, and you start setting up your payroll items, okay? So again, all of this is going to be something I'm going to be talking to you and walk you through them, okay? Now, again, what are payroll accounts? Well, payroll accounts are going to be things that are on your chart of accounts that you're going to be linking your expenses to, okay? So what do you mean by linking my expenses? Well, paying your employees is an expense that is part of your business. So right here under payroll expense, it's broken down to gross wages. Then you have payroll tax expense, and then you have the employee benefits. Then you have officers, compensations, okay, and so on and so forth, right? These are just the standard ones, okay? If you select that you have employees, it will automatically create these accounts for you. But if you don't, if you say, no, I don't have employees, and then in the future you do, then you're going to have to set up these accounts to be able to compensate your employees, okay? So these must happen first, okay? Now, once you have created your accounts, then the next step is you are going to essentially be needing to create your payroll items, okay? So let's take a look. So if you remember here, right, in chapter 7, we talked about all the lists that exist in QuickBooks, right? Payroll items is going to be one of them. So in this case, right, we have a separate list of items that allows us to be able to set up and be able to pay our employees accordingly to this list. So if I go ahead and click on it, what you're going to notice is that when you actually set up your company, first thing is that, of course, if you select yes, I charge, or yes, I have employees, right? This is going to automatically populate in your payroll items is your standard federal taxes, okay? Because again, every business is going to have to pay into federal taxes, okay? And then when you set up your state taxes, that's going to be a whole separate one, right? Every state has different amount of taxes, right? In the state of Nevada, we don't have state tax, okay? Other states, they do, because again, the more they find a reason to contribute more to the community, the more taxes that they pay, the more benefits they get, okay? So in this case, every state is going to have their own set of taxes that they could pay or pay into, okay? So here you go, right here. This is just set up because this is your standard federal taxes. These are automatic, okay? So this is what happens when you select that, yes, you do have employees, okay? Now watch this, okay? As I go through the payroll interview, it's going to set up not only your accounts, but it will also set up more items here on your payroll items list. So again, you don't have to manually set it up, okay? You don't have to go down here and add one at a time, okay? If you go through the interview, it will set them all up for you, all automatically for you. However, if you have to tweak some of them, yes, you can go ahead and come over here and edit each one if necessary. Okay? So again, payroll items are always going to be constantly changing. Okay? You're never going to start out with providing, all these benefits because you're a small company. Think about it. If 1/3 of your company is having to pay your bills, right, to your vendors, then another third of your company is to pay off your employees. Think about it. It's a huge expense to the company, and can you afford to pay for them? And that's why most cases, when you are a small business, right, sometimes you won't be able to afford those benefits because you're just too small and it costs way too much to have employees, and there's no way that you are generating enough income to be able to cover your employees and also cover the amount of payments that you have to pay your vendors for. Okay, so again, we'll go ahead and walk you through this. So if I'm going to close this out here. Now check this out. This is where we are focusing right here is going to be this section here. Okay, where we are looking at employees, right? If I go to the employee center, it's very similar to a vendor and customer center, right? You have the employees list right here. You have the employee profile, and you have the transactions that you have with the employee, which is going to be paying them your paychecks. But in this case, I don't have any employees yet. That's okay. I'm going to walk you through on how to set them up. Okay. Now, yes, you can set them up directly right here, right? You could do a new employee, but this isn't what I'm going to show you. I'm going to show you how to do it through the interview first, and then we can go forth from there. Okay. So that's the employee center. How do I get there? Same three ways, right? Home page, employees menu bar, or the icon bar employee center this way. Okay. Now let's take a look here. You got turn on payroll. This is only necessary for chapter 11, which is going to be next week, which I'm going to show you what happens when you click on turn on payroll. When you are doing chapter 10, we're essentially setting up the payroll process for both manual and automatic payroll. Okay, and we'll talk about what an automatic payroll system is in chapter 11, but for chapter 10, I'm going to show you how to set up the payroll first, and then we'll talk about paying our employees next week. Okay. Then we're going to enter time. So this is where the timesheet, we took a look at this yesterday. Okay, so basically if an employee needs to fill out their time, you locate the employee, you locate the time and the week that you're recording the hours for, and you just record them accordingly, right? And this is automatically converted and transferred right over to paying your employees. Okay, so again, if you end up paying, right, so you follow through right after you submit your timesheets, the next step is to pay your employees, and then the next step after that is to pay your liabilities. Okay, meaning paying what the government that you owe for the government. Okay, now that's just the standard flow of transactions for the employees. But first off, we have to set up the employees first, like the payroll. We have to set up the benefits, set up the compensations. We have to set all of those up before we can even initiate payments. Okay? All right. So how do I set up my payroll? In this case, right, on your home page, if you click on turn on payroll, that is not setting up your payroll. This is how you set up your payroll, whether you're doing a manual payroll or whether you're choosing a payroll service to be able to calculate and do payroll for you. This isn't setting it up. How do you set it up? You have to go up to the employees menu, okay? And you're going to go through the payroll setup. So if I go ahead and click on this, then it's going to take me to a little miniature interview for setting up what I need to have in order for me to successfully pay my employees. Okay, so here it is. You're going to get this window here, and it's broken down into 4 components, right? We're going to start with the company setup, and then we're going to start with the employees, then start with the taxes, and then year-to-date information. Okay, so this is where I'm going to begin my payroll setup, right? Now, before we even get there, right, you're going to go through your payroll items. So in this case, there's a bunch of list of items that you can take a look at and what they deal with. In this case, this is for you to read because, again, you need to figure out what you want to provide your employees. So you need to go read through all of these things to see if these are options that you want to have and things that you want to consider. Okay? So after you read all of that, then we can go ahead and begin our payroll interview. So once you have everything ready to set up your employees or set up your payroll, right? Figuring out how you're gonna pay them, and so on and so forth, then we may begin. Okay. So again, only way to do that is to go up to the employees menu and click on payroll setup. You can enter the payroll setup at any given time. So it's not like the Easy Step interview where you can only go through it once. In this case, you can go through it as many times as you like. So for instance, right, maybe you want to start your company with not having any benefits, and then in the future, when you generate enough income, then you start implementing a benefit plan. Then fine. Yes, you can go into this payroll setup interview any given time to set those benefits up at any given time. Okay, so again, down here you can say finish later. It doesn't matter because at the end of the day, this is what you're completing for your employees. Okay, now is it necessary for you to go ahead and go through the interview? Absolutely not. If you know what you're doing and you know how to set up your payroll items, you don't even have to go through this. This is only if you are a beginner at payroll and you're not quite sure what you want to do, go through the interview because it will help you tremendously on how to set up a lot of stuff. Okay? But again, if you are an avid user of QuickBooks and you do know what your position is in HR, then you don't need to go through this. Okay? You could simply just manually enter in all the payroll items that you need for your employees. But in this case, I'm going to show you what the book shows you because the book is basically saying that this is for those who are beginner users of QuickBooks. So let's go ahead and go through the payroll setup interview. Okay? So here you're going to start on this page where it says welcome, or in this case, we're setting up our payroll. All right, we can go ahead and click continue. So we're going to start off with our very first category is our company setup. Okay, so it tells you right here, we're going to set up the company first. Okay, so I'm going to go ahead and click continue. So first thing I'm going to set up is how do I compensate my workers? Do I compensate them as an hourly wage? Do I compensate them as a salaries? Or do I compensate them as a bonus, right? They work for me based on commissions, meaning they just their job is to sell, and they just get a portion of the money. Okay? If you do offer that, then go ahead and select those, okay? Now, right now, it's automatically selected just because most common traits of a business that pays their employees is they're going to either pay them as a salary base or they're just going to pay them as a hourly rate, okay? Usually, that's very typical, so it's automatically checked for you, okay? Now, what else can they be paid by? Well, in this case, can they be paid by tips? Okay. Can they be paid on commissions? Okay. I'm going to say yes, they can be paid on commissions. Can they be paid on a piecework? Right? Now, here's a rule of thumb here. You also have to take into consideration if you are planning to pay your employees, right? You need to know what the state's minimum wage is, okay? Every state has a separate minimum wage, okay? It's not a federal wage, it's a state mandate, okay? So in this case, right, the state of Nevada, I believe right now it is about it's $10 right now is the minimum wage to pay the employees. It used to be $8.25, but of course times has changed, so now it is up to $10. Okay? So now that's the minimum wage. Now, if you choose to select that tips count for the part of their income, then they can fall under the exception where they do not need to be paid at the minimum wage. They could be paid but lower than that. Why? Because tips make up part of their income. So again, a lot of here in Vegas, right? We are very hospitality based kind of service where we know, especially on the Vegas Strip Boulevard, everybody's working to make tips, and they do, and depending on the company, yes, the tips do go towards the income. Okay, so that means they're all getting paid below the minimum, but that's okay because they're earning most of their income through tips. Okay, that if you do have that, then go ahead and select that in there. Okay, so I got commissions, I got bonuses. Okay, so in this case, maybe I'll take off commissions for now. We'll do bonuses and we'll do hourly and salary. Okay, so once it looks good, I can go ahead and click next. So here it populates my items here. Now, it also included double time and overtime. In this case, your book tells you right under this section here, we're not going to offer any double time. So what do we do here on this list? You can edit, you can delete, and you can add whatever wage you want to do on this section, right? Right here it gives you to add, edit, or delete. Now in this case, right, I don't offer double time, so I can delete that. And it will ask you, are you sure? Yes. I don't offer overtime either, so I can delete that. Yes. Okay? So I have hourly, salary, and I got a bonus. Okay? So in this case, I want to go ahead and change what this says because hourly can be something, right? If I offer to pay my employees, right, what kind of employees are they? You can choose between a regular employee, which means a full-time employee, or if they are a regular worker, but they are a part-time, maybe you might have a part-time hourly, a part-time hourly wage rate, okay? So in this case, I'm going to edit this. Now, it says here, what do I want to name this? In this case, your book tells you that you want to name it hourly regular, okay, for regular employees, okay? It is active. It is an expense. To what expense is it? It's going to be payroll expenses, gross wages, okay? All right, and then once that looks good, I could go ahead and click finish. Okay, so there I finished editing that one. I'm also going to edit my salary as well because this one is also going to be salary regular. Okay. We also need to make changes to the payroll expense because I wanted to make sure it's associated to the gross wages. Okay. And finish. And then last but not least, I have bonus. This could be towards for anybody. Okay, so bonus is fine, active, and I'm going to change this to gross wages as well. Okay, so that means if we do one of those things where, hey, at the end of the year, I'll give you a Christmas bonus. Okay? So we can offer that as well. All right? Awesome. So that's how I set up the first section, which is the compensation. Okay? That's not all for the company. There's way more than that. This is just the very first one, which is setting up how do you pay your employees? How do they earn money from you? And they earn money through me by either working an hourly job, or they do a salary job, or they can earn through bonuses. So once I finish that section, I can go ahead and click continue. So now next is going to be setting up your benefits, okay? First one is going to be your healthcare, okay? So wait for, there you go. So what kind of health insurance does your company provide? Okay, and yes, you can select I do not provide any health care. Okay, some companies do that. Unfortunately, they do. Okay, but in this case, right, I can choose. Do I want to have health insurance? Can I provide dental insurance? And if so, what about vision? Okay, do I offer things like a health savings account, or even a let's see, other insurances, life insurance, right? You can also definitely have one of those things that you can offer there for benefits in case you do get are deceased during the time that you're working, right? And you paid into a life insurance plan. You can offer a lot of other insurances. This is just insurance for the sake of health of the employee. So in this case, I'm going to say I only offer health insurance, no vision, no dental, no life insurance or anything like that, okay? So in this case, I only am going to put in health insurance. So I'm going to go ahead and click next. So once I've done that, now the question asks, is this health insurance? Is it going to be 100% covered by the company? So the company pays all of it? Or is it going to be both the company and employee pays 50-50? Okay? Or is the employee going to pay for the entire thing? Now, most cases, okay, especially depending on your company, okay, so a company like Walmart, for example, right, they generate so much income that they can pay for the insurance and cover it 100%. But for other companies, right, that offer health insurance, right, they expect you to pay a portion of it and then they cover the other half. Usually it's 50-50. So in this case, this is why when you do have a health insurance that is split between the company and the employee, what you're going to notice is the employee is going to pay a portion of the money towards their medical insurance, and it comes directly out from their paycheck, right? Or if it's one of those things where a company does offer insurance, but they only offer it for you to purchase it, and they don't provide it, right? That's a difference there, right? A company can sponsor the health insurance, but that doesn't necessarily mean that they are going to be paying for that insurance, right? Then oftentimes that is going to be something that you have to pay out of your paycheck 100%. So in this case, most cases, let's just say we're a big enough company to be able to pay for half the medical insurance, but not for the whole thing, okay? Because it's just a photography type of business, right? The often, ability for someone to get sick on the job. Again, we probably offer flexible hours. So in this case, we will cover half the employee and the employee will cover the other half. Now, the question is it going to be before the paycheck, or before the taxes calculated, or is it going to be after the taxes calculated? It really depends. Now, most cases, it's always after tax, just because, again, here's something that the government definitely does not want you to do. They don't want you to deduct away from your income, because your income is what pays the government because of the federal income tax, right? The more money you make, the more the government's going to take from you. So again, usually it is always done after the tax. It's very rare that it's done before taxes, but that could be an option if it's possible. Okay, but most cases it's always done after taxes. Right? And then I can go ahead and click next. So then it's going to ask me who's my vendor and so on and so forth. And in this case, I'm not going to schedule anything, just because first off, I could offer multiple insurances. Like I can say, hey, employee, I can offer you 3 types of insurance. You can take one for Blue Cross, you could take one for American Cross, or you can take one for, I don't know, some random HMO company, okay? Some kind of HMO group. I can offer you all of those, but you can only pick one. So which insurance plan would you want me to buy, or to what you want to pay into, right? So in this case, if it's multiple different vendors, then you don't want to designate a specific person. So in this case, you don't want to schedule it either, because it's on a per person case scenario. So in this case, there you go. I'm going to select I do not want to schedule. So I can go ahead and click finish. So now here you go. I have 2 things. I got 1 health insurance for the company, and then I have 1 health insurance for the employee. Now in this case, the health insurance that the company pays for is already a separate expense to the company, right? The company has to pay for insurance in general anyways, all right? So in this case, that's not something that's going to be something that you want to keep on the payroll list, because at the end of the day, right, all you really want to do here is just calculate what the employee is going to be making a payment for, okay? So in this case, the medical insurance is going to be we're going to get rid of the companies. Okay, so I think this is the company. We're just going to get rid of this because we won't need it. And then here we're going to change this because I don't like health insurance. We're going to make it, and it's going to say medical insurance. Okay, I don't want to have that one. It's going to be medical insurance. Okay, it is active. Okay, and then of course I'm going to click next. Okay, again, don't schedule anything. Next, and now it's going to say how do I set up this or link it to an account here. Okay, and what we're going to do is we're going to link this to insurance expense for health insurance. Okay, so this is not a liability, it's an expense, and it's going to be linked to, let me see if I can type it in, HEH. So let me see, health insurance, insurance expense, okay, insurance expense, health insurance, perfect, okay, insurance expense, health insurance, okay, and there you go. So I can go ahead and click next. So then now it's going to ask me, how am I going to be taxing my employees for this? In this case, right, it's asking you, do you have a custom tax setting? Most cases, safest bet to do is do not make a customizable tax. Why? Because again, if you're not the tax professional and you're taxing them incorrectly, you could get very much in trouble with the IRS. So best rule thing to just do here is just use the standard taxes. Okay? And I can click next. So then now it asks me what is going to be my calculated amount. Okay? So in this case, do not calculate. All right. So in this case, I'm not going to calculate because you can choose the different calculations based on maybe it's a percentage, maybe it's by pay period. In this case, I'm going to choose do not calculate. Okay. And we're going to enter in an amount. Now, what is this amount that's going to be the default rate for the amount that you charge for medical insurance? In this case, it is going to be per month, okay, $100, and it's going to be per month, okay, and let me see, monthly. Do we have a monthly limit? Let's see, $100. So it's $100 per month, and it's gonna restart it's gonna restart. Let me see, monthly limit restart. Yes, it's gonna restart every single month. Okay, and then the default limit. There is no limit to medical insurance. Okay, so make sure that you do note that there is no cap limit on how much an employee can invest into their healthcare. Okay. So once that looks good, then I can go ahead and click finish. So that's me setting up that payroll item. Now notice this. This is me setting up my payroll item, and it's going through scenarios of questions to ask. That's the same ordeal when you go into the payroll items list and you're setting up the item one at a time. You're going to go through the same exact questions, except this one, they put it in question form to make it easier for you to fill out. Okay? So that is setting up my health insurance. Okay? And I can go ahead and click continue. So the next section we're going to be setting up is going to be any benefit plans. So do you offer any benefit plan, such as a retirement plan, okay? So the most common one that you will see here is a 401k, all right? Now, you can check out what the other options you have here. So, for example, right, a simple IRA. Now, I have never heard of a company that issues out IRAs. Okay, usually an IRA is something that you personally go to your own bank account and open up yourself. Okay, that's why I was like, it's to me, it's not as common for a company to offer an IRA, but if it has it, then go for it, right? You can even offer things like a 403B, a 408K. So again, I don't really know what these benefits really do because again, the common one that you normally hear most often that a lot of companies offer is a 401k plan, a 401k retirement benefit plan, all right? Now, if you don't know what these things are, go ahead and click on this blue link here and it basically says what are these retirement benefit plans. It will give you an outline of what they are and give you pretty much a description of what they do. Okay, so again, most common one that we normally see would be a 401k plan. Okay, and I'm going to say yes, my company, we can offer a 401k plan. Okay, and I click next. So then now it says, well, who am I going to do that? I'm going to skip this for now. So next. So now it's going to ask me. So now I have two 401k plans, right? I have 401k company match, and then I have 401k employee. Now I want to change these the way that they look. Okay, because I don't want it to say 401k co-match, right? I want it to say something else, okay? So in this case, so I am going to go into this 401k plan here, and I'm going to edit the first one, which is the 401k co, and I'm going to rename this match 401k. So I'm going to edit this information here, okay? So here it is. It will pop up a window right here for this item here. Right now, it's currently named as 401k company match. No, I want it to not say that. I want it to say match 401k. All right. And it's an active item. Yes, it is. Okay. And then I want to, let's see. We can go ahead and click next. And then now we can go ahead and set up the person. So in this case, when you have a retirement plan, you need to have a person who is going to be collecting this money for you. So in this case, do I have a vendor that's associated to this 401k? Yes, I do. It is Merrill Lynch. Okay? Merrill Lynch. So M-E-R, there it is. Merrill Lynch. Okay? What account number is going to be associated to this 401k? Let's see. It's going to be account number 99-1234567 So remember, this is another company that's that you go to be able to manage the 401k. All right? And then again, do not schedule anything just because every person's 401k plan is going to be different, right? Not everybody's going to want a 401k plan. Okay? And not everybody's going to make the payments every single time. So again, it's also another per case scenario. Okay? So do not schedule next. All right, so then now it's going to be asking me what kind of expense account am I going to be linking this account to. So it is an expense, okay, and it's going to be an expense to the employee. Hold on, where's the employee benefits? Right here, employee benefits, okay. So because it is an employee benefit, right? They're getting a retirement plan. So there you go. Select the payroll expense employee benefits. Okay. Then the next one's going to be a liability because, again, as a company, right, even though you're paying into this expense account, right, as an employee's benefit, right, you're going to take it away from their paycheck, right? What they're doing is when you take it away from their paycheck, essentially they're going to be owing that money to Merrill Lynch. That's why we had to set it up. And we have to make payments to Merrill Lynch every so-and-so, okay? And then we'll also figure out how we pay Merrill Lynch all the time, okay? We'll schedule our payments for Merrill Lynch. But in this case, it becomes a liability because even though we don't technically have to pay Merrill Lynch every single time we do payroll, right? We can save it up till the end of the month and pay Merrill Lynch then. So then this becomes a liability because I'm collecting money from the employee to hold on to until I make a payment to put into their personal 401k plans. Okay? So in this case, this is a payroll liability. All right? And it's going to be employee let me see. It's going to be liability account, payroll liabilities, other payroll liabilities. Okay. So then now I can go ahead and click next. So again, all of these accounts that I am picking from are what already exist in your chart of accounts. So again, you may have to set that up if you don't have it. Okay. And then, of course, use standard tax. Okay. And then now this is how much I'm going to be capping off the company's portion of how much they can contribute to the 401k. So in this case, yes, we are going to calculate it based on a based on a percentage of pay. Okay, it's always going to be based off of the amount that someone they earn, right? So whatever amount that they earn, if they choose to put in a certain amount, the company's going to match them either whatever the payment plan, the agreement is, right? It could be dollar for dollar. It could be, oh, if you do 2%, I'll do half of that, so 1%. So again, it could be 50% of the amount that you put in, or it could be matched dollar for dollar. Now in this case, it says right here, I'm going to do it as a percentage of pay. Okay, I'm going to offer to all my employees that I will match them 50% of whatever they match up to. Now, in most cases, depending on what kind of company it is, they can give you the maximum of 6% of your paycheck to be put into your retirement benefit plan. So that means they can match you up to 3%, or if they match you dollar per dollar, then they can match you the same amount, 6%. Now, in this case, we're not that, we don't generate that much money, so we can say we can offer to pitch in a 2%, okay? 2%, and if is it an annual limit? In this case, let's see. Liability set up as this 401k is going to have a limit. It is at the end of the year, okay, and it's going to be we're going to have it to restart, okay, every year in the grand total amount of, let's see, it's going to restart at $16,500. Oh wait, that's the wrong one. It's going to restart it's going to restart at 5,500. So that means that's the cap amount that the company can pay into for the whole year. Okay? If you're going to do 2% of their paycheck, that means it will cap at 5,500 per year. And then the next year rolls around, it's going to start over, and the company's going to pitch in 2% of your paycheck. Okay? And then I can go ahead and click finish. Okay? So that's just setting up the company's matching portion of the 401k. We also have to set up the employees portion, which is going to be like this, okay? So here, we're gonna call this 401k deduction, okay? All right, because it's going to be a deduction to the paycheck, so 401k deduction, okay? It is an active item, so I can go ahead and click next. Who are we going to make a payment to? Once again, Merrill Lynch, right? Account number 99-1234567. Okay, don't schedule any payments. Okay, and then now we're going to be taking a look at it's going to be a liability account, and it's going to be payroll liabilities, other payroll liabilities. And then I'm going to click next. So now this is set the standard taxes. So then now this is how I'm going to be setting up how much can the employee put into their 401k plan. So in this case, I am going to calculate it. It's going to be a percentage of pay, just like how the previous one was, right? And this time, the maximum that an employee can put in is up to 4%, okay? And it's going to restart over again every year, and the cap is going to be $16,500. Okay, that means the employee can put up to $16,500 per year to their benefits. Okay? and then I can go ahead and click next. Okay. And there you go. And now I finished. So I have two payroll items here for the 401k deduction, and I also have the match 401k. So one of them comes off the employee's paycheck, the other one the company matches. Okay. So that's setting up the retirement plan. So I go ahead and click continue. Right? Now let's see what other things I can set up. So let's see. Next one is going to be paid sick time off or paid vacation time off. It's up to you. In this case, we offer vacation time. Yes, we do. But that's only for our salary-based workers, okay? Regular workers do not get the opportunity to take vacation and get paid, okay? So this is an opportunity that cannot be given to regular workers. It can only be given to salary workers. So in this case, salary vacation looks good. The title looks good. So let's take a look into here. Okay, so again, what kind of expense is this? This is going to definitely go towards their gross wages, right? If I have to pay for them to go on vacation, then that's definitely going to be something that they can earn, okay? And then I'm going to click finish. So there you go. I only offer vacation pay or PTO, right, personal time off, to only my workers that I pay on a salary basis, okay? And I can go ahead and click continue. So then now it's going to be listing out what other benefits and deductions can you offer to your employee. Now again, let's take a look. You have taxable fringe benefits, you have mileage, reimbursements, you have miscellaneous. So this is, okay, so I mentioned this, I think, yesterday, okay? Mileage reimbursements, okay? This shouldn't be on or considered as part of the check unless you are including it as part as a daily thing. Like, for example, you have to commute to this every single day, right? Maybe I have to commute from or travel to my work every week. This is something I can say, fine, I'm going to include it as part of your compensation. But for most cases, if it's like a one-time ordeal where, hey, we're all going to go over and have a conference in another state, travel and meals and expenses are going to be paid by the company, then no, that should definitely not be something that's part of the paycheck, okay? And then we also have things like fringe benefits. Fringe benefits, what does that mean? So for example, right? This is a photography type of company, right? It allows, maybe since we're a corporation, right? We are very famous for doing lots of wedding photo shoots or even like things like branch openings, right? Openings. We do it all. So for instance, maybe we might be a lucky company that might be able to get tickets to the Met Gala, right? Which is a huge event for all the superstars and things like that. And what they could do is they can offer the company free tickets, right? Or discounted tickets. And with that opportunity, you have to, in return, you go there and take pictures, right? That's considered a fringe benefit because you are being sponsored by another company, and that's the benefit for working for this Imagine Photography is I get the opportunity to go to the Met Gala for either a discounted price or I can go to work the job there and take pictures of the red carpet, right? Whatever it is that's considered a fringe benefit. Other ones could be discounted prices for AAA, right? or even telephone. So a lot of companies, right, they offer, hey, if you work for my company, because you're working for my company and you use my company's name, I can get you an employee discount to get the services that you normally would buy outside of the company. So for instance, AT&T, they do that a lot with a lot of companies. So that's considered a fringe benefit. Now, of course, fringe benefits are not free. It's part of us, you have to pay some portion into the company in order for you to get all of those benefits. Okay. And of course, miscellaneous additions. So anything that you want to put in there, any wage garnishes, even if you want to have union fees. Okay. So again, union fees do go against your paycheck, right? Because that's something that you have to pay into for the protection of the employees. So that's definitely something that you have to do. And then of course, if your company offers an opportunity for you to donate your paycheck. So for instance, every Christmas, right, they say, hey, donate to the Make-A-Wish Foundation every year, or would you like to donate to the Make-A-Wish Foundation or Toys for Tots Drive? Would you like to do that as part of this company's outreach program to, give back to the community, whatever, charity, right? Yes, you can also have that as part of something that you take off the paycheck, okay? And so on and so forth. Now, in all of these are all extra benefits that you may or may not have to pay into, or the employee has to pay into or not. Now, in this case, these are just a bunch of extra benefits. So again, if you pay for meals, that's something that's cool too. So if your company has a food court, you can pay your employees money so they can eat lunch while, on the premises of your company. So lunch is provided instead of having the company pay your meal for, or order the food for you and pay for your meal. They have a facility that they just pay you for, and you get those vouchers to go buy food with. Okay, so those are things that can be either to or against. So again, benefits or deductions that could be added or subtracted to a paycheck. So in this case, I don't offer anything extra. Okay, and I can go ahead and click continue. So now that finally concludes the very first section of the company setup, which is, again, it's only long just because I have to explain what they all are. But again, if you are looking into this, setting this up for your own company, then you're going to have to pick and choose between what benefits you do offer and what and deductions you do offer and not offer, okay? So that is the first section there. Any questions? No questions. Excellent. All right. So next section we have here is going to be discussing entering in an employee. All right. What are the information that you need to have in order to set up your employees? Well, let's take a look. Okay. So here we're going to be adding in our very first employee. Okay. So you need to have all this information. So maybe you would obviously have to have the standard state identification state identification card. You need to have a social security card. You need, if you only employ U.S. citizens, then you may need to require some kind of birth certificate or some kind of certificate of naturalization. Okay. You also need to have a W-4 form, right? That's to be able to withhold the withholdings that you need to have, okay, from the employee's paycheck. And then anything other than that, I don't think that those are usually the main four. Is you need to at least have those legitimate documentations, okay? Anything extra, such as a background check, a fingerprint, or a drug test. Those are extra things you can ask your employer to do. That has nothing to do with setting up the employee itself, okay? So that's a precaution for your company. If you require all of those for your company, then you go ahead and facilitate those on your own. But for this, you just need these main 4 documents that I just talked about in order to be able to complete this section here. Okay? All right? So first one is going to be legal name. This must be the legal name that is written on both, on both Social Security card and your state identification card. It has to be the legal name. Cannot be cannot be a nickname. Okay. So it's very important that you do list this here, because if you are issuing a paycheck, right, it's important that you list it out as their legal name, not their nickname, because sometimes some banks, when they recognize a name doesn't match the person's name on the account, it does not go through. It's because the names don't match. But in this case, you have to use the legal name. So in this case, the person that I'm putting in here, her name is Katie Reynolds, right? Maybe her full name is Caitlin Reynolds, okay? So I can say it's Katie Lynn Reynolds, okay? Never mind, that's first name first. Her first name is Caitlin, okay? Her last name is Reynolds, okay? And then, of course, print on the check, it's going to be Caitlin Reynolds, okay? Now, if for any reason you call her Katie, or she goes by Katie, then that's going to be something that's going to be a note to the person's profile, okay? But in this case, if it's her full legal name, it has to be the full name. Now, I believe it just says Katie, but I'm going to assume that's a nickname. So her full name is Caitlin Reynolds, okay? And again, print on the check is going to be Caitlin Reynolds, okay? Employees status, she's active for sure, okay? And then let's see, what is her home address, okay? This is very, very, very important that you have to put here, because this is also going to tell you how are you going to tax Caitlin or Katie, okay? Because Katie Reynolds, right, the way that you are being taxed is based on where you reside, okay? Even if you work in any other state, if you reside in another state, you are going to be taxed at the state that you reside in, not the state that you work in, okay? I know there are some rules around that. So such, for example, basketball pro players, they get to earn their money based on which stadium they play at, right? That's one of the exclusions to that rule. However, it is based on where you reside in, okay? It's not based on where you work in. So if Katie lives in California, but she works in Nevada, she's gonna be forced to pay California tax, because that is where she's residing. She's only temporarily working out of state because maybe it's the best gig that she can get, or maybe she's in between. She's trying to switch between. But for this sake of taxes, it's based on the state that you reside in. Okay. So in this case, right, her address is going to be, let me see. Her address is going to be 3432 Enos Lane. Okay. So 432 Enos Lane. Okay. City, Danville. State, California. So CA, California. Zip code is going to be 94501. Okay. And I can go ahead and go next. Right. So that's just that. So again, it is very important that you have a address for Katie, because if she doesn't have an address, then then you might not be able to tax her properly. Okay. So next. So next thing I have here is going to talk about the employee type. So what kind of employee is she? Is she a regular employee? So again, regular employees are also known as your I just had a brain fart. Your regular employees are going to be the ones that you have are the ones that you have full control over, okay? You tell them what to do, you tell them when to do it and how to do it. So in this case, she is a regular worker, okay? So it's a common law worker. It's also known as what it's called, but a lot of nowadays people just refer common law as your regular workers, okay? She could be an officer, okay, a statutory employee. Again, their job for statutory employees is they do everything that is been told, but the only difference is the time frame, the end result you cannot measure. So in this case, we talk about the different types of employees in the accounting class. So in this case, if you're not familiar of what kind of employees that you can or cannot have, I would definitely recommend you guys to visit irs.gov /publication 15. It will give you a list of all the different types of employees that you can and cannot have. Okay, and that will include also listing out things like independent contractors. Yes.
Is there a reason why we want to add the owner to this employee list? Because yesterday we were talking about the owner won't get paid.
Okay, now that is only if the owner of the company is the owner. So think of it this way. When we talk about the different business organizations, right? A sole proprietor and the owner is one, okay?
Yeah.
But in this case, this is a corporation.
Yeah.
Yes, the owner can work for a corporation because the corporation, right?
Yeah.
Who owns the corporation? Stockholders. So that means everybody's an owner. So that means everybody can have the opportunity to work for a corporation because the corporation is its own entity. Now, in this case, the reason why it's considered an option is because this is a corporation.
Okay. Thank you.
Right? So that's a huge difference there too. So yes. Okay. Now again, Katie's just a regular worker. Okay. Common law worker. Okay. So then other hiring information, okay? What's your social security? So this is very important because this is also going to be the means for us to collect not collect, but for her to be able to say that this is my identification number, this is my social security number, so then I be able to keep track of all the money that I've earned, right? So that's why it's important that you have a social security number. Now, for any reason, again, if you are having an alien or a non-citizen work for you, they should be getting a temporary social security number. Or they call it a temporary work social security number that allows them to work in the United States even though they have a visa. They're just visiting. Okay? Now, in this case, right, we already know that she is a natural born citizen. So in this case, a social security number is required. Now, it doesn't say it's required just because, again, depending on who that person is, if it's a non-citizen, then of course you're not going to have a social security number. Okay. But in this case, let's see what her social security number is. It is going to be 333-22-4321. Okay? Fake social security number. All right. And then now hire date. Okay, never mind. Now it says it's required. So now hire date. When did you hire her? We hired Katie as of April 1st of 2008. Okay? And let's see. Release date. Release date is only if you have fired her. Okay? If you haven't fired her and she's still continuing to work at your company, ignore this. Okay? This is only pertinent if in case you are in the middle of your payroll period, right? And you had to let go somebody in the middle of the year. So let's say I had to let go somebody in June. Then I have to keep all the records from January to June because I still have to file for taxes that includes this person who worked the first 6 months. So that's why it's important that you keep this release date, right, as a record for you to update if and when an employee does choose to no longer work for you, okay? So there you go. And then, so we can ignore that. Birth date. What is so important about a birth date? Why is it important that you have to require a birthday? Anybody? Why is it a requirement to know an employee's birthday? No, it's not for celebrating their birthday. Anybody? No guesses? It's to ensure that they are legal of age to work. So remember, there is a legal age for someone to be able to be working for you full time. I believe the age is 18. Any younger than that has to be signed off, or they have to get a part-time job but still has to be signed off by their parents, because legally you cannot have children work for long periods of time. Okay, so the only exception to that is 18 and above. So in this case, Katie is for surely older than 18. Okay, so she's legally to work for us full time for as long as she wants. Okay, and then gender. It is now notice this gender. Yes, in this case, the reason why they ask for gender is not so they can segregate you, but for the key components of statistics, okay? They need to know, because if we are a corporation and we are releasing our financial statements out to the public, right, we have to inform our statistic value saying what ratio of employees do we have, right? Versus like, because you're going to have to do a lot of statistics like what is your ethnicity, right? What is your background? What is your gender? Now that's only so then when they put it onto the statistics board for the employment center, they can say, well, statistically, right? This is majority of majority of males are in this business, okay? And then a portion of it is female. So again, the statistics is a powerful resource because then it can also give you a reason to want to apply for a job because of the ratios that they have is not even, okay? So again, for example, IT, right? IT is a really dominant for males. So that's why it is a great opportunity for females to go into the IT business because they're more likely to get chosen over a male because of the idea is that they're trying to shoot for equality, right? this can't be a man's field for a job. It has to be equal between male and female. So that's just all this is asking for. If for any reason the Katie does not want to disclose her gender, right? It is completely fine. That should be acceptable, right? We live in today's society where we are accepting of all genders, okay? So for any reason that she doesn't want to reveal her gender, then you can just leave it blank, okay? But in this case, she says it's fine. Let's go ahead and put that she's a female, and we can go ahead and click next, okay? So then let's see what's next here. Now it's going to be, how do we pay Miss Katie Reynolds, right? Are we going to pay her every week, every day, every 2 weeks, twice a month, every month? You choose. This is your payroll period, okay? It is very important that you designate a payroll period, because then this is where you get to figure out for yourself how much money do you need to save up every so-and-so days to be able to afford to pay your employees, right? So again, most common ones that you do normally see right now is bi-weekly, meaning every 2 weeks. So that means a total of 26 paychecks. Or you do normally see a semi-monthly paycheck, payroll period, right? Where you get paid twice a month. So usually the 5th, the 16th, and the 1st of every month, right? Because it's counting the first half of the month, and then it counts the second half of the month. Then you get paid. Now, usually salary-based earnings are usually semi-monthly, and usually the regular hourly workers get paid every 2 weeks. Okay? That's just usually what it is. Okay? But in this case, she is definitely going to get paid bi-weekly. So every other week, so bi-weekly. Okay? And of course, is she getting paid hourly? She's actually going to get paid salary. Okay? And what's her salary amount? She earns $60,000 per year. Okay? Salary is always together as an annual rate. It's usually not given as a wage rate. It's given as a big, huge lump sum amount. Okay? So now that we have that, okay, we can go ahead and click on forward. Okay? Okay, wait. Hold on. She's going to get paid semi-monthly. Never mind. She's going to get paid every 2 weeks. Right? Or twice a month. Okay? And again, $60,000 per year. Okay? And then you can ignore this section here. Okay? And then I'm going to go ahead and click next. So then now it's going to tell me what are the benefits and what are things that are going to be taken away from her paycheck. So in this case, right, first thing we have here is the 401k deduction, right? How much can she be deducted from this? What's the amount? In this case, right, we have to figure out, let's see. For the 401k deduction, it's going to be 0, but the limit is going to be $16,000. For the 401k match, right, that's the company. Okay, so deduction, the amount is right now is going to be $0, and the limit is $16,500, right? That's the cap maximum. And then the match is also going to be 0, right? Because it is. And that means the company is going to match her up to $5,500. And then for the medical insurance, it's going to be $100 right off the paycheck. Okay? That's how much the insurance cost every paycheck. is $100 per paycheck, which isn't bad. That's about $200 per month. Okay, and the company pays the other half. Okay, and once that looks good, I could go ahead and click next. So now it's going to ask me how I'm going to be calculating XYZ. So first one is going to be calculating Caitlin Reynolds' earning. Okay, so how much does she earn, or how many hours can she earn for her vacation? So in this case, right, since we offer all of our salaried workers, right, we offer them PTO, okay? So in this case, right, so this is where it's going to be different in the book than for this one. So your PTO, right, you're going to earn 80 hours. She has 80 hours that she can earn for PTO, okay? And it's going to be based on per year. So the beginning of the year, okay? And then, of course, the next one says, what about unused vacation? What does it do? How many does she earn, and how many is it going to increase without any limit, or is it going to have an actual limit, or is it going to, like, basically it's going to carry over? In this case, we actually have a limit, okay? So in this case, the maximum amount of hours that she can claim for PTO is going to be maximum is 200 hours. Okay, and again, Katie Reynolds can earn time off currently. So in this case, what are the options? Time off currently, a no limit off until. In this case, it's just you can leave it as time off currently. Okay. And then let me see at the bottom here is what is the current balance that she currently has right now that she's used. In this case, I'm going to leave this part by itself blank just because you don't need to set this part up because right now her balance, right, she hasn't used any. So in this case, her balance is still 200. How many has she used already? 0. Okay. All right. And then we can move on to the next one. Now, the next one asks, do you want to set up direct deposit? Okay. Now, direct deposit is a very, easy way to pay your employees, right? However, if you did not know this, this is, you actually have to pay the bank to be able to do direct deposit for you. So if you have less than 20 employees, you do not need to if you have less than 20 employees, it's not worth it to pay the bank money to process direct deposit, okay? So that's a huge rule that you want to make sure you understand is that what is direct deposit? Is it free? No, it costs money. So if you have over 200 employees or 100 or at least 50 employees, then yes, the cost can spread across evenly throughout all of your employees, and it might be actually beneficial for you to just be able to transfer and wire their money directly into their bank account. But again, for companies that have less than 20 employees, unfortunately, the cost to pay the bank services to process this for you, right? They have to take money from your checking account and distribute it to X amount of people's bank accounts. That is work, okay? So with that, it costs money. So unfortunately, for smaller businesses, it's not worth it to be able to pay just to have a couple people get direct deposit. So in this case, are you going to have Katie get paid by direct deposit? No. Okay, because actually I'm going to tell you this. We only have 2 employees. All right, so in this case, sorry, Katie, it's not worth it to give you a direct deposit. Okay. All right, next is going to be withholdings, okay? Which state is she going to be withheld for California, right? Because I put in her address was in Danville, California. So it automatically pulled this information for me automatically saying, okay, that means for her state, she's going to be subject to California tax. Okay? And then again, for the state subject to unemployment is also going to be California. So Californians actually do pay into their own unemployment, okay? It's part of one of their taxes, right? They have a section for their unemployment, a section for the disability, and then another section for something else, their own California withholdings. So again, California pays a lot of taxes, okay? And then here's second question here is while working for you in 2022, did Caitlin Reynolds, okay, have or worked in another state? No. Okay? Why is this important? Because if Katie is, let's say, working off-site and she works in another state, that means she's earning income from another state, right? So that means if you said yes or no, right? The purpose of this is so that they can properly take out the tax at the correct state that they are residing in. So in this case, did she work somewhere else? No. Okay. Next. Okay. So next thing that we have here is going to be dealing with Katie and looking at her W-4 form, okay? So the W-4 form is very important, especially because this is what lets the employer, basically it tells the employer how much taxes to withhold from her paycheck. Now, because of my screen, it's a little messed up just because I have it at the largest percentage of magnification just so that you guys can see it on your screen. So in this case, there's this little thing right here. This is just basically the marital status, okay? But in this case, right, which W-4 form are you using so you can correctly tax her for the correct amount, okay? Because yes, every year, as we know, the IRS loves to do this. They love to always change the taxes on us every year. So as we know, every year taxes always increase, okay? And how do we withhold our taxes? Well, in this case, if Katie is married, right, and she has, 3 children, right? That means the money that she's earning might not be enough for her then when she takes home after the taxes, right? It might not be enough for her to sustain her family. So what she can do here is with a W-4 form, right? When you submit it to an employer, you're asking them to withhold taxes for you, right? And what you can and cannot take away, okay? So then at the end of the year, when Katie does file for tax at the end of the year, there's a couple options that she can do too here. If she takes out too much money from her withholdings, she might be subject to have to pay the taxes at the end of the year. Now, there's also another option that instead of claiming her children now, she can claim them at the end of the year and then might not have to pay taxes then. So again, there's a lot of different ways that you can do this. Again, I'm not a tax accountant, so this is definitely something you want to speak to your personal tax accountant about. But when you withhold something from an individual person, that's their discretion on whether they need that money for whatever reason that they need it for. So in this case, which form did they use? Now, if you are going to be looking for an employment as of today, you're going to be filing the new W-4 form for 2020 and later, okay? So there's a huge difference between the two different W-4 forms, okay? The one from 2019 and prior, they were looking at withholdings as if you can mark them as a number, okay? the new W-4 form, right, considers all of the income that you generate on an annual basis. They calculate and take into consideration that you might have multiple jobs because, again, in today's society, it is very easy to have a primary job, and then after you worked your 8-hour shift, you can go ahead and do a part-time job as Uber or Lyft. Yes, today's society, having multiple jobs is a huge thing, and they want to make it easier for everyone to just, instead of filing different W-4 forms for every employer, they want you to make it easier, just fill out one. So in this case, there is a huge difference. Now, because we employed Katie since 2008, she's most likely going to have a 2019 and earlier type of W-4 form. Okay. Next is going to be her again, marital status is here, so again, I can't. There you go. She's going to be filed as married. Okay, so she is married. Okay. And let's see, how many number of withholdings does she have? 2, or allowances, and then any extra withholdings? No. So she's probably claiming that she's married is one of the claimings that you can do, and then maybe the second one is she might be claiming one child. Okay, so there you go. All right, and then I can go ahead and click next. So then these are all the taxes that she might be subject to have to pay. All we have to do is just skim through it. Again, it should be automatic because for any reasons that you put in her residential address, it's going to automatically pull up whatever taxes that are in California and whatever taxes that are possible. Again, because federal is going to be number one because everybody has to pay federal tax, and then California is going to be based on where she lives in. We've stated that she's in the state of California, so that's why all of the taxes from California have populated here as well. Okay. And then let's see here. So she's going to be subject to California tax, right? Filing status, again, she's married, has 2 withholdings and 0 extra withholdings. So again, this is for the state of California. Okay, and then next. So then here it asks you, okay, that means she must be subject to California employment. So again, this is where I was talking about that you do pay into, for Californians, they do pay to their unemployment, and they also pay a portion to their disability. Okay, and again, question is this person subject to any local taxes? Okay, what is a local tax? Well, a local tax can be anything that the city that you're living in, if it needs to tax people for a means, for example, public transportation is one of those needs, right? So a great example is if she lives in Danville, right? I don't know where Danville is. If it's close to it's not San Francisco. Let's say she did live in San Francisco. She would have to actually pay a small portion to local taxes because the San Francisco has that trolley that goes down, up and down San Francisco city, right? That is something that is a public transportation and that is provided by the taxes in that city. So in this case, that's considered a local tax that she has to be subject to pay for. But in this case, she lives in Danville, so no taxes that we know of. Okay. And then next. And then last but not least, we have what tax code is she going to be using? In this case, we're just gonna make it S. Okay. What are these tax codes or tax plans? Again, I'm not a tax accountant, so I'm just following what the book says. The book says you want to use S for the state plan, okay, for both UI and DI. So again, unemployment insurance as well as a disability insurance. Okay. In this case, that's what the book says. Go ahead and select her to use the S. Okay. And then click next or finish. Okay. So that is how much details you need to know about your employee in order for you to complete their whole entire profile. All right. That was really long. Any questions? Now, do you have to set up all your employees here? No. No. You don't need to go through this interview multiple times and stay on this interview, right? This is just an overview to see what kind of information do you need to have in order to set up your employee. So once again, this is for those who are not familiar with payroll and doing payroll for the first time. They're not quite sure what information they need about their employer or employee. This is all the information you need, okay, to be able to fill in every single section, okay? So if you guys don't have any questions, I'm going to stop here. We are done with the employee section because I'm going to move on. I'm not going to add in another employee because that's, again, a lot of information, but we're done with the employee section, okay? When we come back from the break, we'll talk about the taxes in after the break, okay?